I would imagine that that retail investors are disappointed in the price action in gold. I was asked this morning again, where do you see gold next week? Are you bullish, bearish, or neutral? I mean, to be honest with you, I just don't know because it really depends on the context that you look at the market from. And, I've been saying forever, I sound like a broken record. I mean, if you're buying precious metals as a position in your portfolio and you have a specific reason, i.e. you want to hedge against the balance of your portfolio, then you don't look at this thing every day. You're just holding metals, and as an allocation, as a percentage of your portfolio. I mean, if you're a trader, it's a totally different ballgame. I mean, right now I can tell you that my sentiment looks bullish next week. I like the fact that gold has regained the 200-day moving average from a technical perspective. I would rather be long this market as a trader as opposed to being short the market, specifically reference to gold. But on Monday, I may get something else that will change my mind in the short term, and I'll be out of the market, possibly short the market. So it's just a totally different psychology. But from an investor's perspective, the macro picture has not changed. The Fed is going to continue easing policy. The Biden administration is going to do its best to pump up the stimulus package. COVID situation is certainly not behind us. There's going to be more stimulus coming into the market. If you look at the PPI numbers that came out this week, they were considerably higher than anybody expected. There's all this pent-up demand that's sitting in the market right now. And, if we get some kind of normalization in the economy, this is going to spill over and there's going to be a ton of spending. And in that scenario, it would be a hard argument to suggest that inflation is not going to accelerate. And that is, on a macro basis, extremely bullish for commodities. So again, it's a matter of patience, I guess is the best way to say it. If you're looking for a quick pop to $3,000, I don't think you're going to get it. It's a matter of patience, and it's a matter of how you allocate your portfolio. If you look at the industrial metals, if you just look at the ratio basis, silver is almost at where it was when gold was trading at 21.90. Gold is back some $400 from the high, and you've got silver about $1.50 away from the high, ignoring what happened a couple of weeks back when we got that little pop surge over the weekend. And if you look at platinum, it's cruising around the $1,300 level. Rhodium is north of $24,000. I mean, copper is moving substantially higher. If you look at the industrial base of metals, they're all indicating that the demand side is expected to increase, and it will also be benefited from inflation. Gold generally leads the pack, but this time it may follow the pack, but it will be pulled along with the industrial demand in the metals. That's one part of the equation. The second part of the equation is I do believe that inflation will run hotter, considerably hotter, and that's if you use the government numbers. I mean, if you go to the grocery store, you already know it's running hotter than the 2% target the Fed has got in its window. And there's absolutely no way the Fed is going to put on the brakes on their fiscal stimulus until at least mid-2022, in my opinion. So you have a situation where the Fed and most central banks in the world are likely to get behind the curve. And if they get behind the curve, we could have a 70s type of scenario where inflation gets out of control, and then the Fed has to react. But until they react and they start to tighten, I just think you have to be constructive the metals. And yeah, it's disappointing. Gold is trading south of $1,800. But again, if you're a retail investor and you're holding it as part of your portfolio, this is noise. If anything, I would add to the position at these levels. And if you're a trader, yeah, you've got to be a bit more nimble because the market is moving on sort of news bites on a daily basis. Now, again, take it off the rails. The whole economy collapses and we go into a major recession, depression, whatever you want to call it. No amount of stimulus is going to get us out of it. I think that scenario would have to be a virus type of related news event where the variants get out of control and we need to shut down the entire economy.
Yeah.
That to me would be the white swan where I would probably see the metals dropping significantly as people raise cash. I don't think that scenario is a high probability, but it is a possibility. So those are that is one scenario that I'd be watching closely. But assuming that scenario does not play out and the vaccine takes hold, and sometime mid to late summer we're back at what I would consider normal. I'm not even sure what that's going to look like, but normal. I just think the pent-up demand in the economy from the retail side and the amount of money sitting on the sidelines is massive. It's just hard for me to believe that that's not going to create an inflation spike. I think that silver has a two-edged sword. One, you have serious shortages of small investment size bars in silver. So retail investors are still chasing the silver market, and so there is a significant demand function still going into the cash silver market. It's difficult to pick up inventory, and when you pick it up, even at premiums that I consider ridiculous, $4 to $5 on 100-ounce silver bars, anywhere from $8 to $15 on coins, silver coins. I personally would rather not be in the market than pay those kind of premiums for physical product, but that's just me. But there, you have this continuous demand on the physical side of the market. You still have the mints that are in allocation mode. Still have logistics issues coming out of with the airlines. Got 40% capacity on the airlines. A lot of this metal flies in the cargo hold of commercial airliners. And you've got a 60% reduction in traffic there, so it's hard to find space. Logistics costs have gone up anywhere from 500% to 800%, depending on location. Some of the mines in Mexico are having trouble producing the silver and getting it moved. So that's the short-term issue. The more medium-term issue for silver is that there is an expectation that the economy is going to recover. And now you add to this equation of retail demand and physical demand for investment product. You add to that equation the demand that comes from industrial use. And especially with Biden being the president, and if he gets his Green Deal set, there's going to be much more demand for silver on an industrial basis. So you add that to the equation, and you can see that this sort of supply tightness in the silver market is likely to last for the foreseeable future. And as long as that continues, you're going to have this variation of price with silver outperforming gold. I mean, silver ratio to gold early last year was probably in about the 80 to 1 range, and now it's trading at 65 to 1 or better. So I see that continuing. And even with gold getting hammered, I mean, 2 weeks ago at 1850, now at 1780, silver is basically up in that same time window. Again, take the aberration that happened 2 weeks ago, but it's trading at the mid 27s. So there's obviously continuous demand and supply issues with silver, and I don't see that changing in the foreseeable future.